Hey fellow investors and fellow stock guardians, it's Friday, April 9th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from another green stock market. As usual, I took a look at the stock market indices movements, discussed why investors are getting excited about an undervalued stock, and shared a hidden gem stock that could be the next Monster Beverage. The market indices wrapped the week in the green thanks to a rally in the last 2 hours of the day. Yesterday's new jobless claims were higher than expected. However, the continuing claims went lower, as did the total of those receiving jobless benefits. That was one positive good news. The earnings season is about to start next week, with bank stocks earnings on the way, and investors are mostly hoping and expecting excellent results. That's another reason for the upward movement. Overall, it's an excellent Friday to wrap up the week. For the winner stock of the day, let's talk about Intel, ticker INTL. The company came up today at the weekly meet and greet session with the stock guardians at 1 p.m. Pacific. We were looking at the companies with a strong growth potential, strong operations, overperformance compared to the market, that are also undervalued, or as users call it, for greeners. Intel meets all those criteria, and the stock price was also up today by almost 2%. When I see all green stocks like that, I immediately ask myself why a solid company with solid growth potential is undervalued. There must be a reason for undervaluation. So we dug a little bit deeper during the call with fellow stock guardians. First thing that comes up is that the investor sentiment is also overexcited, which tells me investors are turning bullish about Intel. I can also validate that by looking at the latest updates on the company's stock chart. So there must have been something that bothered investors in the last few months that forced the stock price down, and now things are turning for the better. Earlier in the year, investors were disappointed at Intel that the company decided to double down on building its own chips despite falling behind in technology cycle. Then, as the US manufacturers struggled with the global chip shortage, Intel came to the rescue and decided to build manufacturing facilities here in the US, creating jobs for Americans and rescuing the country from the chip shortage. That strategy has been paying off, and investors are warming up to Intel, as they should. It's a company with solid operations, profitable and cash generating, that you can buy at a quite discount when you look at common valuation ratios such as price to earnings, price to sales, price to free cash flow, and price to book value. And to add cherry on top of the cake, it's a solid dividend paying company. For the loser stock of the day, let's talk Celsius Holding, ticker CELH. I came across this stock while researching hidden gem stocks. First time I heard about it was from an investor and Twitter personality, Jonah Lupton. He compared Celsius to Monster Beverage. We know that the market for energy drinks or soft drinks have been growing quite rapidly. According to the company's investor presentation, the market is growing about 7% per year. Celsius offers flavored, healthy, low-calorie, no-sugar drinks and iced teas. While it's a small $4 billion company, it's already profitable, and its operations generates free cash flow. The revenue is growing rapidly too. Celsius positions its product as athlete's drinks because it is clinically proven to enhance metabolism. I have no idea how to verify that claim, but it's also the type of branding and marketing that would allow a company like Celsius to price its drinks higher than other usual iced teas and soft drinks that you can buy in supermarkets. Talking about supermarkets, the risk to this company, like many other smaller future food type of companies, is distribution. We have discussed the same distribution challenge for a company such as Tattooed Chef. How can these smaller food and drink companies get their products to store shelves and in front of their target customers, and how to make those customers to see their product in an ocean of other products in stores. In response, it seems that Celsius has already found its way to more than 80,000 retail locations and even started distributing its product in Asia. Here's what the company's CEO had to say to Jim Cramer on CNBC about the progress they have made on expanding their distribution.
Absolutely, Jim. We're up to 82,000 locations we closed 2020 with. It's really exciting. Speedway is a big part of it. Kroger, CVS, Rite Aid, many others. The biggest opportunity now is retailers are updating their sets for 2021, and we expect Celsius to gain additional distribution. So keep your eyes out at those retailers. You'll be finding Celsius soon.
Overall, this one seems to be an excellent stock for risk-taker investors who are willing to pay for a stock that is overvalued by traditional valuation metrics, but can get as large as a company such as Monster Beverage. Adding this one to my watch list now. Thank you, Jonah, for sharing the stock on social media. Hopefully one day we'll see your portfolio on a stock card. Alright, don't forget to reserve your spot for Friday's meet and greet sessions using the link in the show notes so that I can share a few tips and tricks about how to use the stock card platform in your research. And as always, if you like to give a stock card a try, research as many stocks as you want, and receive stock pick ideas from successful investors, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, like the hidden gem stocks we discussed today, please like and subscribe and share with your fellow investors. I'll see you next week.